Good day, and you are welcome to Business and Finance here on Echo Television International. I am Rachel Tanzi. Now, recapitalization, it's coming with its ups and downs, and then we are seeing certain banks are getting worried that in the process they might lose their identity. However, the Central Bank of Nigeria is not going back on this process, as there's a need to keep certain standards and inflow in the monetary system of the country. Now, we are seeing that the Central Bank of Nigeria have directed banks, every bank in the country, to be able to increase and strengthen their capital base. Now we are looking at over 500 billion for banks that are operating internationally, and then for local banks we're looking at 200 billion, and then for micro banks, be it microfinance banks that only operate within the shores of the country, we're looking at a 50 billion naira threshold. Now the Central Bank of Nigeria over the period of time have given out three specific mediums for banks to be able to raise this capital. And then in the past week, we've seen where Zenith banks have had meetings. We've seen GTCO having meetings. We've seen the First Bank Nigerian Holding. We've seen Access Bank. We've seen major banks that are already taking the steps forward to see that they are able to come up with their 500 billion naira minimum capital set by the Central Bank of Nigeria. However, we are having banks that are at the brink of getting merged or losing their license to operate as an international bank, or they would have to drop down to the local level, which they have left years back. We've seen that Central Bank of Nigeria have stepped in for certain banks for precise reasons, so that they will not have to be out of business because they are important for certain region. However, for some banks, the Central Bank of Nigeria cannot do anything about it, but of course find banks that they will be able to merge, liquidate, or just find a way forward. Either they go downward in the level of ranking in the banking system. Now, the three options that the central bank had given are the injections of funds through private placements, right issues, where we've seen over banks giving over 5 billions of their shares to customers that already have it. We saw that of the Zenith Bank starting. We saw that of the GTCO, and so far these banks are seeing significant amount of funding and offers for subscription. So we know that we are seeing a lot of activities from our bank, most especially for stakeholders, and then being able to give right issue ordinary shares precisely. Now, mergers and acquisitions and upgrades or downgrades of license authorization is going to happen for certain banks. And for some banks, they have the option to downgrade. And for the banks that don't want to downgrade, they only have the option of merging. So I believe the banks that are looking to merge are the ones concerned about their identity. And then the banks that are looking forward to downgrade their license are the ones that will have to no longer operate at the international level, but just remain a local bank within the country. Either way, these banks are going to lose their authority, they are going to lose their identity, and above all, they are going to lose their ranking, customer base, and all of that. But then we will just have to wait and see. These banks will be revealed eventually, but we have banks at the top. One of those banks is Unity, and then we are going to look forward in-depthly to where Unity stands at the moment, Unity Bank, why the central bank is deciding to go with it the way it is, and then what is the future for those banking with Unity Bank. Now, we're also seeing that although that of Heritage Bank is not a capitalization issue, but we saw that they violated some banking laws, and therefore the central bank had no option but to liquidate Heritage Bank. And then now we are seeing that certain customers are yet to receive their funding, while we have the NDIC saying that over 82% of the customers have received their funding, while 17.64% are yet to receive their payment. Now, a spokesperson for the appointed liquidator NDIC, we are talking about Mr. Nuhu, said the remaining 17.64% of the insured deposits yet to be paid were likely depositors whose accounts have post no debit, PND precisely, instruction, or have no bank verification numbers. Now this is very important for a lot of us who don't have our BVN, the bank verification number, or haven't linked it to their account. Now we don't know. You should know precisely the standing of the deposit money bank that you are banking with at the moment, and if there are any risks of being liquidated, if there are any risks of being merged, so that anything that would affect your funds should be cleared, because the NDIC have been able to initiate a payment process utilizing bank verification number to transfer up to 5 million naira per depositor into their alternate bank account within a record time of 4 days. That is very fast. Now, this method, which allowed depositors to receive funds without visiting any NDIC offices or filling out forms, marked a significant achievement in the corporation history. Now, what this means is that we would no longer see customers going to the NDIC office in terms of liquidation or in terms of anything that you can continue banking with certain bank and you need your funds transferred to another account. As long as you have your BVN linked to any other account or registered, it becomes a simple process. And then you won't, and also if you do have if you do have a post no debit instruction. Okay, so these are the two major things. But then the BVN makes it more easy for the NDC to be able to transfer your funds in case your bank get liquidated. Now, this 17.64% are those who haven't linked in their bank verification number to their other bank accounts, now making this process not 100% successful for the NDIC. And of course, it's a process that has to go on, or we know how banks operate. There will be a time limit where you either forfeit these funds, or of course it goes back to the Central Bank of Nigeria. So if you do have funds with Heritage and you haven't linked your bank verification number, this is not just for those banking with Heritage Bank, but I believe for any other bank that you find yourself being a customer, it is important for us to link our BVN, because you don't know what will happen. Looking at the recapitalization saga ongoing with the central bank and the deposit money banks at the moment. Now, the currency in circulation has reached a new record high. And then the Central Bank of Nigeria is worried. I believe that every measures they put in place turns out to be a failure regarding making sure that, you know what, currency in circulation has reduced significantly, so that there will be more of a cashless system where more money is back to the central bank or within our deposit money banks. Now, no, we can go back a little bit to the reason behind the new Naira note, the new Naira redesign, where we had the former CBN governor Emefiele together with the presidency of Buhari, Muhammadu Buhari. And now looking at the creation, or the redesign rather, of the new Naira note, we saw that the reason was to be able to extract back the old note, now then pumping in little by little the new Naira design. That was an absolute failure, as we saw a cash crunch that led the economy into a crisis. Now, let's look at the data precisely of how much was started for the year 2024, that is as of January, how much has in circulation was there out there, and what are we looking at? As of now, we are looking at over 4.04 trillion naira in circulation, which is way above what was seen at the last quarter of 2023, and even what was seen for the first quarter of 2024. Now, the Central Bank of Nigeria money and credit data also highlighted that currency held outside bank reached a historic high of 3.79 trillion naira, accounting for 93.6% of the total currency in circulation. That is a lot, and so far so good. This doesn't speak well, because this also is one major factor affecting the value of the Naira as it is now. Now, a breakdown of the first 6 months of the year shows that 2024 began with 3.65 trillion naira in circulation, reflecting a stable start aligned with typical post-holiday economic activities. Of course, the last quarter of 2023, the Christmas period of December, cash is mostly in circulation a lot. So that was a fair number to begin the year 2024 with. By the end of February, the figure had modestly increased to 3.69 trillion naira, a growth of 43 billion naira or 1.18% from January. Now, March recorded a more substantial rise, with the currency in circulation climbing to 3.87 trillion, marking a month-on-month increase of 175 billion naira or 4.76%. The trend continued in April, with the figure reaching 3.92 trillion naira, an increase of 53 billion naira or 1.39%. From March, likely spurred by heightened economic activity during the Easter period. Of course, when there are festive activities going on, of course, circulation of money tends to be higher. In May, circulation further increased to 3.97 trillion naira, a rise of 42 billion or 1.07% from April. The most significant jump occurred in June, when currency in circulation peaked at 4.04 trillion naira, an increase of 84 billion naira or 2.11% from May. So we are looking at closing the first half of the year. We are looking at currency in circulation at 4.04 trillion naira. So the first quarter, the second quarter of the year, we are seeing continuous increase. There was never a stabilized flow, but rather a continuous increase in the money circulation out there. Now, looking specifically at currency outside bank, the year started with 3.28 trillion. That is, we're looking at the 1st of January, it was at 3.28 trillion naira. By the end of February, the figure had risen to 3.41 trillion, an increase of 130 billion or 3.98% from January. Now, we can go on, and of course you can have a speculation where we are having an increase of over 2.11% as at the month of June. You can do a little prediction of what it will be for July. We are already in the month of August, and we are already in the third quarter of the year. And there will be significant celebration. We are going to see Salah celebration. And then at the last quarter of the year, we are going to be seeing the Christmas celebration. So we have major festive celebration going to happen in the third quarter and the fourth quarter of the year 2024. So I think, or we can all predict together, that of course 4.04 trillion naira is just the start. We are going to see a significant amount of increase of money in circulation for the year 2024, except if the Central Bank of Nigeria have a plan in hand. Of course, the plan will be to start retracting, taking back the old naira notes and leaving the new note in circulation. However, there shouldn't be past mistakes repeated, so we do not have a repeat of the last quarter of 2023. Now, we would like to see why precisely the Central Bank of Nigeria is giving Unity Bank 2 and Providence Bank. Now, there are two major reasons behind this situation. First of all, it is going to make Northerners be unbanked. Yes, precisely, because majority of bankers, of those banking with Unity Bank, are Northerners. Also, most of the debtors under the bank are farmers, Northern farmers. Now, a key consideration by the Apex Bank was that Unity Bank remained a systematically important bank that must not be allowed to fail in the interest of many depositors across the northern part of the country. We have sources revealing that the amount of depositors found in the bank was not really a major concern, but the fact that Unity Bank currently remained the only bank servicing many northern states and local government. Therefore, the central bank was of the view that if the bank was allowed to go down, many people across the north will be unbanked and will not have access to a financial service institution. In addition, it was learned that most of the people who borrowed money from Unity Bank are mostly farmers. Thus, a failure would likely have a devastating impact on the region and country's food security initiative. We have sources also revealing that these were the major consideration by the Central Bank of Nigeria when it approved Providus bid to take over Unity Bank, adding that Providus Bank has 80% of the capital injection into the new entity that would emerge from the proposed acquisition. So, of course, Providus Bank have the criteria, if met it, to be able to acquire Unity Bank, over 80% of the fund needed for it to acquire Unity Bank. And of course, we've seen these mergers in the past when it comes to banking in the country, recapitalization, and certain measures that the central bank have been able to take to make sure that certain banks continue. Now, we are saying that, first of all, is for the sake of the region in which this bank is, as most northerners bank with Unity, and then also farmers have taken a huge amount of loan. If this bank was to go, access to these loans will become very difficult for farmers, and of course the farming activity in the north will be affected, likewise its economy. So yes, of course, Unity Bank is one of those banks that will eventually lose its identity. And of course, this is also one of those banks that we have seen the central bank stepping in to rescue it in the past. But I believe the central bank is no longer taking this approach, but rather giving it to a bank that is capable to keep the bank afloat for the sake of its customers and also the economic value in the northern part of the country. We have importers and manufacturers having region issues in their different capacities, and we would like to start with importers precisely. And this is a report from the NRC. We are looking at the Nigerian Railway Corporation, looking at how the charges at the Lagos-Ibadan seaport is making business really difficult. And despite so much explanation from the Railway Corporation, we see that, of course, importers are not understanding. Let's look precisely at what is the issue and the problem for Seaport and then the Railway Corporation. Now, we're looking at the fact that the Nigerian Railway Corporation is saying that additional seaport charges slammed on cargoes by terminal operators at the Apapa port is a major reason why importers opt for road or barge haulage of their cargoes instead of rail haulage. Now, it's expected that rail should be cheaper. By its virtue nature, it should be faster, cheaper, affordable, and more accessible. Now, this complaint from the NRC was in Lagos during a one-day stakeholder sensitization summit on limitation to rail transportation of cargo in Nigeria, which was organized by the Nigerian Shippers and Council. Now, the NRC Director of Operations and Commercial Services, Mr. Akiwumi, explained that if those seaport charges can be removed, more cargoes will be moved by rail from the Lagos port. Now, let's not forget that we've been seeing a continuous increase in the charges by the Apapa port in Lagos. Now, if the concern here for NRC is that they are not linked or connected to other seaport. It's just this Apapa seaport precisely. If they had access to the Tinkan port, to Lekki port, to Onne port, and Warri or Calabar port, the charges in those ports are less compared to what they face at Apapa. If only they had a connection to this other seaport, they won't be having these challenges. So since the Apapa seaport is the only seaport at the moment that they're currently affiliated to or linked to, it is important that certain charges be removed so that they will be able to be in business, and it's not only road or barge haulage that will be available, but also that of rail. Now, for cargo haulage from the ports to the hinterland, there are incidental charges hampering these services. This is one of the areas we expect the Nigerian Shippers Council to help us look into the stop, because these costs are not allowing cargoes to be moved by rail from the Apapa port efficiently. Now, in the logistic chain, people often forget that movement of goods in one stage affects the other. Of course, many of our customers at the port are always telling us that our services are too expensive, that we must bring down the cost of cargo rail services at the APM terminals in Apapa. So now this means that the NRC are encountering bad business at the moment. And of course, we need every transport system to function in the country if we want to grow economically. So it's not just road, it's not just air. We also need to see that our rail is thriving, because it is also a very good option for cargo movement in the country. So yes, whatever the Apapa Seaport can do to bring down its charges so that we can have the NRC not having business issues, and of course not losing their customers and generating revenue, a win-win for every authority, for the Lagos Authority precisely, and then Nigeria also. At the end of the day, I hope that this be looked in by the Shippers Council, because the NRC is having a concern that they will run out of business. And once there is a problem in one level, I think others will be affected immensely. Now, we're seeing that it's not only the NRC that is having issues, we're also seeing manufacturers complaining. Despite recent report coming from the Central Bank of Nigeria that direct deposit, that is credit to manufacturers in the country, has gone as high as 50%, over 50%. We're looking at a surge in credits to manufacturers in the country. We are also seeing MAN coming out to say that despite all of those wins on the side, there are certain activities by the Central Bank of Nigeria, a breach of agreement that is also a threat to their services in the country. Now, the Manufacturers Association of Nigeria has issued a warning saying that the Central Bank of Nigeria's failure to redeem $2.4 billion in FX forward was posing a grave threat to the survival of Nigerian manufacturing companies and jeopardizing the livelihoods of thousands of workers. The Director General of MAN, Mr. Segun Ajayi Kadiri, emphasizes the critical nature of the situation in a report published recently. The implication of the continued unsettled forex forwards by the CBN and its impact on the manufacturing sector, asserting that the non-payment of FX forward has severely crippled affected companies, pushing many towards bankruptcy. Now, let's go back a little bit to the history of this FX forward. Now, in 2022 and 2023, Nigerian businesses, including SMEs, entered into agreement with the Central Bank of Nigeria to exchange foreign currency at predetermined rates on future dates. Now, these agreements, known as foreign exchange forwards, are designed to manage foreign exchange reserves and stabilize exchange rate. However, the Central Bank of Nigeria has yet to fulfill this contract despite their maturity. So we are also seeing other activities by the Central Bank of Nigeria that is affecting the stability of our exchange rate. And so far, so good. Since 2022, this agreement have been made, and the Central Bank is yet to keep to its side of the bargain. Now, MAN outlined in the statement that the non-settlement of the FX forward obligation by Central Bank of Nigeria has caused over 1.5 trillion in forex-related transaction losses in the manufacturing sector that recorded 108.7% increase in job losses in the year 2023 and forced many small and medium enterprises to close operations to the detriment of the Nigerian economy. So we're seeing that our medium-scale enterprises are not only dealing with tariff high diesel prices and then the high fuel pump prices, but also a forex forward that the Central Bank of Nigeria is not keeping to its side of the bargain. Therefore, a lot of related losses in exchange when it comes to our currency as against other foreign currencies that these businesses, manufacturers need to be able to have a smooth ride when it comes to running their business. I just hope that the Central Bank of Nigeria is taking these statistics from MAN seriously, and also how their failure to keep to the side of the bargain is affecting not only manufacturers but also small medium enterprises in the country. And for small medium enterprises alongside with other manufacturers to have a loss of 1.5 trillion naira, that is a lot. And we are looking at a report for 2023 where jobs have been lost and the central bank have not come through yet. So we will be having a different report for how much losses we are having, our manufacturers and then small enterprises having for the year 2024. So yes, I hope that the central bank is on their toe, as it looks like there's so much work needed to be done, most especially when it comes to our monetary policies in the country. Now, thank you for staying to the end with me. Keep a date with me next time on Business and Finance. Goodbye.